Well, good afternoon and welcome, everyone. Thank you so much for joining us here this afternoon on our Capital Group YouTube channel. I'm Kevin FitzPatrick, a partner at the Capital Group and CEO of the Government Technology Insurance Company. We provide healthcare, commercial insurance, and 401k strategies to the Washington, D.C. business community. We're going to spend about an hour together this afternoon discussing some of the key provisions around PPP loan forgiveness. By now, almost all of you have had your PPP loans funded, and the next big question is how do we make sure they become forgivable? Our legal and compliance teams, in conjunction with our partners at Hertzbach Accounting and Company, have spent much time analyzing the latest information from the IRS, from the Treasury, and the SBA, and we're going to share with you what we know and point out areas of the law where the guidance is still unclear. At this stage, we may not have answers to every question, but I can promise you that we'll keep you posted as new information is released. Our legal department is ready to help you with your questions, provide guidance and strategic advice all throughout the loan forgiveness process. Please don't hesitate to reach out. With that, I'd like to welcome today's panel of experts. We have Andrew Beardall, in-house general counsel at the Capital Group and COO of the Government Technology Insurance Company. Andrew is a graduate of the law school at Catholic University and also holds a graduate degree in neuroscience. Dan Wahlberg is a CPA and partner with Hertzbach and Company. Dan's been with the firm for over 22 years and is the director of Hertzbach's Government Contracting Services Group. Dan's extensive experience with the FAR, incurred cost submissions, and other projects related to DCAA compliance have made him an invaluable resource. Mike Stankus is also a CPA and a partner at Hertzbach and Company. He's been with the firm for over 16 years and is a leading member of Hertzbach's Government Contracting Services Group. Mike's expertise includes due diligence for M&A activity, forensic accounting, complex cost accounting projects. Mike also represents clients before the DCAA and assists with FAR compliance. Throughout today's program, please submit your questions via the chat feature. I'm going to be monitoring it, and we're going to try to get to as many of them as possible. If we don't get to your question, feel free to contact us post-program, and I promise we'll do our very best to answer it. Our contact information will be posted, and this program is going to be recorded for future reference. So, we have a lot to dig into today, and without further delay, I'd like to turn it over to Andrew Beardall. Andrew, go ahead and take it away.
Good afternoon, everybody. Thank you so much, Kevin. I appreciate you inviting me to talk at this thing today. And the first thing that we're going to do is we're just going to go over a quick primer on the PPP program. And then my friends at Hertzbach are going to dig into the forgiveness aspects of it and some of the more nitty-gritty details that I'm sure you're all interested in. So, excuse me, allergies, not coronavirus. So the first thing we want to do is take a little look at the SBA's payroll protection program. This came from an aspect of the CARES Act, a piece of legislation that was signed by the president that allows companies of 500 people or less to borrow up to $10 million to help keep their employees working. That was the goal. So even if in fact, I just misspoke there. It wasn't to keep them working, it was to keep them paid. Because even if you were closed, if you were a miniature golf course, a bowling alley, you couldn't operate. With a PPP loan, the idea was you would keep your employees on the payroll, off of unemployment, and continue to pay them with the idea that you would eventually reopen and those people would be back at work. The trade-off for that is the government was going to make this loan something forgivable, in that you would not have to pay back the loan as you do other small business loans and the like. The goal was to just maintain some continuity and income security for those employees. And it had the added benefit of allowing for some overhead costs, which we're going to talk about in more detail. If we go on to the next slide, please. So this specialized loan was available for folks with companies with 500 or fewer employees. And it became available right after the law was signed. Within a couple of weeks, they had guidance out on how to apply for it and I know many of you have applied. Your business has to have been working on the 15th of February, and the SBA waived a lot of the other provisions that normally come with an SBA loan. So you didn't have to go look for funding elsewhere. You didn't have to put up collateral or personal guarantees, which, as you can imagine, made everything a lot more a lot less risky for the owner of these companies. If we could go to the next one. So, what can you spend this money on? Well, you can spend it on whatever you want, but in order to get it forgiven, there are very narrow categories on which you can spend it. The first is payroll costs and payroll-related expenses. You can spend it on employee benefits. You can spend it on rent. You can spend it partially on mortgage, and you can spend it on utilities. And we're going to talk about each of those in greater detail. Assuming that you do spend that money in those categories, you have an 8-week period to spend it. And as my friends at Hertzbach are going to tell you, that may change. But for right now, the law is 8 weeks. You have 8 weeks to spend it from the day it was funded. There's an alternative method of calculating that, which again, I believe Dan's going to be talking about down the line here, but you have an 8-week block. And you have a couple of restrictions in that you're not supposed to fire people. Your companies aren't supposed to let people go, reduce their salaries. And if you have done that, go out and rehire them, because that's what will make this loan forgivable. So let's talk about the real specific thing. What is payroll costs, right? Because that is the key thing here. At least 75% has to be spent on payroll. So what is payroll? First off, it is actual gross payroll. What do you pay your employees? What do they get their paychecks for? Right? It also will include employer contributions to benefits. So anything that you as a company pay towards benefits can be counted as payroll costs and is forgivable. And finally, retirement contributions that the company makes on behalf of an employee. If you are doing a match or anything along that line for your 401k plan, all of that is forgivable. Now, you can have things like bonuses, HSA contributions, and the like be forgivable as well, but speak with your bank and your accounting team before you do that, because, for example, you cannot pre-fund a whole year's worth of 401k contributions and the like. Things have to be prorated out, and you want to make sure you do it right, because the last thing you want is any red flag that comes up when it comes to forgiveness. Now, there is one restriction on people's salary, and that is it is for people, it can only count up to $100,000 for an individual. So if you make north of $100,000, only that first $100,000 counts in these calculations. Now, if you take $100,000, divide it by 52 weeks, multiply it by 8 weeks, you end up with a bit over $15,000, $15,385 to be precise. And that means any one employee, whether they own the company or make north of $100,000 or less, the maximum that they can count for towards forgiveness is $15,385. Let's move on to the next one. Now, a lot of you are worried about overhead and what overhead costs can be paid off and forgiven under the PPP. Well, the first is rent, right? And rent, that's an easy one. What is the rent that you pay on your office space? But in addition, it can also count rent for personal property and the like. Talk to your bank about that. They may want more specifics, but if you're renting your copiers, a vehicle, something like that, there are provisions available for that. You just want to make sure that you do it right. Next one is on mortgages. Now, you can't deduct the mortgage principal itself, but the mortgage interest is something that is forgivable. You're going to want to keep careful track of it, but you can be, any portion of this money that goes towards mortgage interest will be something that can be forgiven under this program. And finally, utilities. Right? Utilities are what people think of as utilities. Gas, electric, phone, internet. Transportation costs can also be worked in there. From what we understand at the moment, tech costs such as Office 365 and the like, service type things, cloud computing, are not considered utilities. They're still considered services. That may change. But for right now, think of it: gas, water, electricity, internet, and telephone. So flip to the next one. Just a reminder, non-eligible expenses, right? And that is any money above and beyond that $100,000 limit. Mortgage principal, tech services, service provider type things, and any of the employer paid Social Security and Medicare, that match that all of the employers have to do, that is not something that's going to be included. It's not something that is otherwise forgivable. So at this point, I'd like to pass the torch over to Mike, and he and Dan, over the course of the next few minutes, are going to be going into greater detail on the actual forgiveness process, the nuts and bolts of it, now that I've finished my overview of it. So, Mike, if you will.
Thanks, Andrew. I appreciate that. So I'm going to start going through an overview of the process and give everybody an idea of what they can expect going through this. Dan's going to get into a little more detail later on in the presentation. I'm going to start with four main parts. First, I want to get into the actual application. We'll talk through that. We'll go through the supporting documentation you have to keep as part of this process. We'll review what the lender and SBA do in terms of the actual review and forgiveness process. And lastly, I'll touch on what happens if it's not forgiven. Once we get through that, hopefully you guys will tune in next week when all of this changes. So loan forgiveness application. We're going to, again, like I joked briefly, this is changing every day. The House passed a bill. The Senate is up to pass new legislation again. So we're going to review it the way it looks today. Any questions on changes, we'll have to do that as another seminar. So loan forgiveness application, also known as Form 3508. This is going to be completed by the borrower and submitted directly to the lender. Banks and lenders every lender may have a slightly different process in terms of how they deal with this. Same thing happened with the actual PPP application. Banks came out with their own process. We believe it should be available electronically, either through a bank's online portal or be able to submit online through your bank. In terms of the period in which you can submit, you're going to have to wait till the end of the covered period, which is right now the 8 weeks. Again, that's possible that could change. There's talks about the 8-week period getting extended to 16, 24, something of the likes. The other one is June 30th, 2020. So anybody who's got any adjustments, there's some cure periods with the FTEs that go through June 30. So if you plan on using any of that, you're going to want to wait till after that. Deadline for the application right now is October 31st. Again, if things get pushed, it's possible that gets pushed out later in the year as well. So I'm going to walk through the four parts of the application. We won't get into any detail. Obviously, this is a shorter webinar, but at least give you an idea of what to expect when you look at the application. Anybody can Google the PPP loan forgiveness calculation. It's on SBA's website. It's a 2-page summary. It calculates out the forgiveness, and it also includes the reps and certifications that you're going to have to provide as the borrower, that you're being truthful, all the support documentation is accurate. The second piece is the PPP Schedule A. This is additional detail, and it's going to feed right into that forgiveness form, the calculation form. It is required to be submitted. The third part of the application is the Schedule A worksheet.
Yep.
This is the most important piece. While you don't have to use the worksheet that's provided, it is a good format. I think we're going to see a lot of other calculators that are used. This is really the guts of the calculation. You need to keep it, but you don't have to submit it to the bank. The fourth piece is the borrower demographic form, gender, veteran status, race, ethnicity data, things that the SBA wants to calculate, not required. It's an optional form. Let's talk a little bit about the supporting documentation. Page 10 of the 3508 has a pretty detailed listing of all of the support documents that have to be provided. There's really two categories. There's items that have to be submitted to the lender, and then there's items that you have to hold on to. So the important stuff that needs to be submitted is obviously the 2 schedules I talked about before, and then any detail for your payroll costs, support for your FTE numbers, any non-payroll expenses that you claimed, support for that as well. We'll get into detail in a minute. The stuff that you have to keep but don't have to submit, that's mainly support for the initial application. You're going to have to, again, specify the necessity for the loan and your eligibility for the loan. Now, there was a $2 million safe harbor as it relates to necessity. However, there's a possibility that everybody's going to have to justify that. So if you're over $2 million, pay special attention to that documentation. And the most recent interim final rule, the SBA also declared a 6-year document retention period. So anything that's submitted or anything that you have to hold but not submit, you are required to keep for 6 years.
Hey, Mike, I have a quick question about that came up in an earlier conversation, if you have a moment.
Sure.
The question was, that 6-year period, has that essentially turned into a de facto audit period for 6 years? This is going to remain open, your PPP loan?
Well, SBA hasn't talked about the review process and the length of the review or the appeals process that we'll get into in a minute. But the fact that you have to retain the information for 6 years, I would think creates a de facto statute that SBA could potentially come back. So it's a potential long audit period. And I think it is important. It's that actually bolded at the bottom of that last slide. If you can't support the documentation, then forgiveness will not be granted. So an important thing to note.
Yeah, it's a long 6 years. Thank you.
Sure. So documentations, really three pieces. You've got payroll documentation, FTE documentation, and then support for your non-payroll expenses. So for the payroll documentation, you really have to provide an audit trail for the cash compensation that was paid to the employees. That's your payroll tax filings, your 941s, any quarterly wage reporting you have, unemployment insurance. You're going to need these for the periods going into your covered period and for the periods coming out of your covered period. So quarterlies before, quarterlies after. You're also going to need payment receipts, canceled checks, bank statements, account statements to support any health insurance or retirement plan contributions that are being calculated as part of the PPP. One thing to note on the health insurance, a lot of companies have a portion that's withheld from their employees and a portion paid by the company. You're going to have to do that calculation and separate that out that piece so that you can prove the company paid portion. The next slide is full-time equivalency, the FTE documentation. Not a whole lot to go through here. It's very similar documentation as the payroll before. You're going to have to support it at various times before and after how many FTEs you have. Dan will get into a little more about the importance of substantiating FTEs. Non-payroll expenses. Andrew went over this a little bit. Business mortgage interest, business rent or lease payments, utility payments, what you're going to need to support those. You are going to have to prove that any leases or mortgages that you're deducting as part of the PPP expenses have to be in place before February 2020. So you're going to have copies of your leases, any, again, canceled checks that you can show during that covered period that you use to pay, and any third-party support you have to verify that, utility statements, account statements, anything to support each payment that's being included in this. So what happens after the application is submitted? Well, what's the involvement of the lender and the SBA in this process? Once you do your forgiveness calculation, you submit it to the bank. The bank has the first shot at it. So lenders have 60 days to issue their decision on whether the loan's forgiven or not to the SBA, and then the SBA in turn will reimburse the lender for the amount, assuming that it is forgiven. So the lender's got 3 things they can do. They can approve it, whole or in part, so they can give you a partial improvement if your loan balance was higher than the amount you're applying for forgiveness. They can deny it flat out, or they can deny it without prejudice, which means the SBA is doing a review of the loan. So remember, anything over $2 million could be a considerably long period for review, again, without knowing what that SBA review timeline is going to look like.
Warehouse line of credit.
So after the SBA gets a copy of the submission from the lender, they've got 90 days to turn around and go back to the lender and submit their decision or whether they're going to review. So just off the bat, without any issues or any review by the SBA, you're looking at 5 months to be forgiven. So if there's a review, it could be substantially longer than that. So the last interim final rule that came out, it was dated May 22nd, the 15th interim final rule, and I'm sure it's not the last. It specifies a little bit on what the lender's responsibilities are in terms of doing a good faith review of the information supplied by the borrower. The SBA specifies that it is on the borrower to make sure that they're doing an accurate calculation for forgiveness. All the lender really has to do is verify there's no mechanical errors. They got to look at, I'm sure each lender is going to have their own protocol as to what exactly they look at and what level of review they're going to do. So then the SBA has an opportunity to review the individual loan files. They have stated, and everybody's seen, SBA will review all loans greater than $2 million. The last interim final rule also states that the SBA can look at any loan they want at any time they want. So just because you're under $2 million doesn't mean you're in the clear at this point. There has been some talk, there's been some special interest groups that are lobbying for a true safe harbor number. If you have a loan less than 500,000, a million, something like that, where you may not be subject to the review period, but nothing is out there on that right now. So what happens when the SBA undertakes a review? Well, they reach out to the lender. The lender is going to reach out to the borrower. They could also ask for additional information. So the lender has some time limits on how long they have to provide that additional information to the SBA, but the SBA yet does not have a time limit on how long they can take to finish their review. They're looking at a few things in the review. They're looking at original eligibility. Should you have taken the money? Were you under the 500 FTEs? They're looking at the use of proceeds. Same thing the lender is. Are you using the money for what you're supposed to? And they're making sure your calculations are correct. So if there's an issue, the SBA will reach out to the lender, and the lender then turns around and kicks it back to the borrower. So if there's an issue, what happens? What happens if your loan's not forgiven? Well, how can this happen? There's really two ways. One, the lender can deny the loan. The lender gets a first crack at it. They can take a look and say, this is not forgivable. If they do that, they have to turn around and submit all the information you turned in as the borrower to the SBA, and they also have to list why they're denying it. The SBA at that point then has an opportunity to review, and the borrower also has 30 days to reach out to SBA and say they disagree with the lender's denial and that they would like the SBA to review. Second reason is the SBA finds the borrower ineligible. This is going to come directly from a review from the SBA. So they have the right to deny the loan forgiveness application. It's out there. And they have instituted in the last interim final rule a review process. So the borrowers are allowed to appeal. Problem is we don't have any guidance on that. So I'm sure that sounds familiar. And your advisors have probably been telling you for a long time, we're waiting for more guidance. So we're waiting for more guidance. So lastly is the loan terms. So if it does anything that's not forgiven, it's going to turn into a loan. So many of you have seen that already. It's been posted out there for a long time since the beginning. It hasn't changed a whole lot. So the interest rate's going to be 1%. It's currently a 2-year loan. Dan's going to get into a little bit toward the end about potential congressional changes. It's possible that 2-year loan period gets extended out to as long as 5 years. Right now, we don't know. There is a 6-month deferral period on payments during the time that you're in your covered period. However, interest does accrue during that period. So depending on how long the SBA reviews the application, it's possible that the deferment period ends before the application is actually approved. So at that point, I'm going to turn it over to Dan. Dan's going to walk you through some issues and some more detailed calculations on some of the questions I think that are hot buttons right now. Thanks.
Sure. Thanks so much, Mike.
Sure.
Thanks, Andrew. Thanks, Kevin. We appreciate being included in your broadcast today. Many of you have heard the phrase, it's easier to ask for forgiveness than permission. Well, it's not in this case. There's a lot of forgiveness calculations and questions out there, and we're going to try to help navigate you through those popular ones, hot ones that everyone's talking about. Just to give everyone a little bit of perspective on the PPP loan program, there's about $510 billion that has already been given out in the loan program, and about 4.4 million loans. As Mike said, the ones over 2 million will probably have a little more scrutiny to them on the forgiveness process, and that represents about 0.9% of the loans that are out there. So it's still a large number that need to be reviewed and dealt with. So what I'm going to start doing here is going through many of the issues and questions. Please send in questions for the three of us. Kevin's going to be monitoring those, and we'll do our best to navigate through those. The first issue that we're going to just start talking about that everyone's concerned about, probably number one, is the 75% payroll cost requirement. So, partial forgiveness on that will still apparently be able to be obtained based on everything we've seen so far in all the guidance. So, for instance, you're only allowed to have a minimum of 75% payroll costs. As an example, if you spent $300,000 in payroll costs and you have $150,000 of other expenses, they're going to likely allow you to take this $300,000 of payroll costs as forgivable, but only 100 instead of the 150,000 of other costs. So you have to be careful in the use of those loan proceeds. It's definitely a hot topic. We're going to talk about that percentage going forward. That may change. We'll get into that a little later. In addition to that, the next hot topic is the covered period. If payroll decreases during the covered period, what are we going, how does that impact my loan forgiveness? So really what you need to do is examine why your payroll did decrease during that covered period. Was it for terminations, for furloughs, for salary cuts? Each of these items is handled in a slightly different way, and we're going to get into that. But we have to examine basically on a person-by-person basis what is happening with each of those. So as payroll could potentially decrease from previously calculated out payroll prior to the covered period, we have two tests that we need to get into that could potentially limit the amount of forgiveness that is given to each of these companies. The first one is the FTE, the full-time equivalent reduction quotient. It's based on the percentage of FTEs that are covered compared to the borrower's chosen reference period. So you're going to calculate out the number of FTEs that you have currently during the covered period and compare that to a historical period. That historical period, they give each company a little flexibility in determining what that historical comparison period is. So one of them is January and February of 2020, the average FTEs during that time. Another one is a comparable period for February 15th through June 30th of 2019. And the third really reflects for seasonal employers, which is still a bit of an open question. The seasonal employers can choose a comparable period in the past year. So we still don't have great guidance on exactly what a seasonal employer is and how the SBA defines that, but I'm sure we will get more clarification on that in the future. So that's the FTE calculation. And what happens with the FTE calculation, if, for instance, your FTEs are reduced by 2% compared to your historical comparison period, then your forgivable amount will be reduced by that same percentage, so of 2%. So this is a hot one. There are some exceptions and ways to minimize this adjustment, but if your FTEs did go down during that covered period, it's possible your loan forgiveness could be limited. The second calculation that's important for all of us to understand is the salary hourly wage reduction. They give us a little bit more leeway on this one, as basically you compare your salary by employee. This is an employee by employee calculation, and compare it to the first quarter of 2020. And if you're within, a 25% margin there, they don't really reduce your the amount that you're able to capture on the forgiveness. So you need to keep your employees at least at 75% during that covered period. And again, there's some exceptions on all of this. So what do we want to consider when it comes to this? We want to make sure that we consider rehiring laid off or furloughed employees as soon as possible, making sure that our FTEs get up to where they were pre-pandemic, and make sure our wages are up there as well, at least within that 25% margin. All right, so I think, Rob, I think we're a couple slides ahead. Maybe back to 24 if you could. There you go. Great. Okay, so FTE reduction exceptions. So this is the hot topic where we could reduce the total forgiveness by the proportion of FTEs that are there during the cover period compared to the historical period that we choose. There are a few exceptions to that rule, and there has been some clarification. I think that also came out on the interim final rule number 14 last week. But the reduction exceptions, one of them that they speak about is a good faith written offer to rehire an employee that was rejected by the employee. So if you did furlough or terminate an employee during the covered period, and then you extended an offer back to rehire that employee, and they choose not to come back, that will not hurt you on this FTE reduction calculation. So basically, you've got to provide the letter of offer. You have to provide written proof that they have rejected the offer, and the latest and greatest, one of the more important things to do is to make sure that you report it to the state unemployment office within 30 days of making that offer. So this is to try and keep all of, as many people as employed as possible. And I believe the intent here is to make sure that people come off of unemployment as quickly as possible. And some folks appear to prefer to be on unemployment, as some of those benefits currently are potentially more rich than their current or their previous salary. So keep that in mind. Another FTE reduction exception is if you have employees who were fired for cause, or voluntarily resigned, or voluntarily requested a reduction of their hours. So if in those cases, you certainly don't get penalized under this FTE reduction calculation, but all of that needs to be documented. So next slide, please. So there's an additional safe harbor that many of you have probably heard about. Essentially, if you did reduce employee wages or FTE levels between February 15th and April 26th of 2020, you have some time to hire those folks back. And if you do, and you restore those FTE levels by June 30th, then you won't get penalized on the FTE reduction calculation. Similarly, the payroll cost of the 75% requirement, you want to make sure that you've got that above the 75% regardless. So again, we want to make sure that we get back to that 75% payroll, and hopefully you don't get penalized for this calculation. Let's see here.
Dan, we have a quick question regarding furloughed employees, if you have a moment.
Sure, of course.
The question is, if we rehire furloughed employees back well after the covered period, but before June 30th, how will this impact our forgiveness amount?
Yeah, so that's a great question. So that is basically what we're just speaking about on the FTE and salary wage reduction. It should not have a negative impact on the calculation on what was expended. So when you paid out your other wages to other folks during that period, it will not be reduced for those two penalties. However, the one important thing that everyone has to remember, and this goes back to the importance of the goal of the program. If you're not paying the wages, you can't get forgiveness for those wages. So it's really important that everyone understands that if you furloughed them and your overall salary calculations are reduced, you may have way less forgiveness there if you have less salaries that you're paying. So just keep that in mind, that the point, as Andrew eloquently said earlier, is to keep people employed and paid. And if you have furloughed employees that are rehired after your covered period, and I'm going to make one more point about that, rehired after your covered period, then you haven't paid those wages, and therefore those wages that you're paying on later or didn't pay during the covered period are not forgivable. So this gets into a bit about the covered period and the length of the covered period. So we're going to talk a little bit more about that. Mike talked a bit about it, and in Congress, they're explaining that over the next week, likely there's going to be another bill that potentially could expand the covered period. So if everyone can just think about the loan proceeds themselves were based on 2.5 months worth of salary. So, and then our forgiveness is based currently on 8 weeks of salary plus some overhead. So if they expand that 8 weeks to 16 or 24, there's way more time for you to pay payroll. And therefore, that being said, you could use way more of your forgivable expenses. So keep that in mind as that period, that covered period expands. It's really important that could have a significant impact on the amount of forgiveness that you're given. All right. Oh, one other point that I meant to bring up on the FTE reduction and salary hour wage reduction. They have made it very clear that you should not be impacted twice for the same FTE reduction. So if you did terminate an employee, you will not get penalized on both the FTE and the salary. It would just be on the FTE. All right, so let's go to the next slide. Paid versus incurred. The calculation that most people are wondering about also is whether or not how do you calculate it out? Is it on a cash method or an accrual method? Is it what's been paid or what's been incurred? And is there an alternative time period that you're allowed? So there is an alternative payroll covered period. We're going to talk about that in a moment. That is just for payroll. But when it comes to your non-payroll costs, those are identified as specific to your original covered period, which is from the date of the loan proceeds hitting your bank for 8 weeks currently. So those non-payroll costs must be either paid or incurred during the period. Pick one or the other. You can't double dip or mix and match there. You need to calculate those based on a consistent method. And if you are calculating them out on an incurred basis, you need to pay them in a timely manner. So if things are incurred at the end of your covered period and not paid for a week or so after that, that's fine as long as it's paid before the next regular billing date. But I think Treasury and Congress are concerned that people will incur the costs and delay payments on those non-payroll costs for months and months, and those would not be forgivable in that case. So you need to make sure that they're paid timely. The payroll costs also could be incurred or paid. That's up to you. And there is an alternative payroll covered period based on the next payroll date for certain employers. So why don't we talk about that in the next slide. So for most employers, payroll cycles are typically monthly, twice a month, bi-weekly or weekly. So for bi-weekly or weekly payroll cycles, you're able to choose an alternative payroll covered period. So that covered period would begin the first day of the next payroll cycle. So if you received your forgiveness payment and you want to just start on the next payroll cycle, as long as you're biweekly or weekly, you absolutely can. I think the point of this one, and it goes back to what Mike was saying about what needs to be provided and what the banks are looking to do to try to streamline and get the forgiveness calculations done and behind them, is that they want to be able to rely on payroll reports from third parties. So this is a way for them to just say, yep, we can use that payroll that starts just after your loan proceeds comes in, and we're just going to use, the next 4 of those biweekly payrolls, even if they're slightly outside of the typical covered period, so we can package up those payroll reports. There's not a lot of questions there, not a lot of calculations, and they can use those enable them to calculate out the payroll for forgiveness. And again, just to reiterate, the regular covered period must be used for non-payroll costs. So this is just for payroll, but you can, if you're biweekly or weekly, use that alternative date. Next slide here. I'm going to kind of skim through this pretty quickly. The utilities guidance, Andrew spoke about this, transportation costs, gas, driving a business vehicle. It definitely applies to self-employed individuals. As far as we can tell, those costs are able to be recovered through forgiveness as non-payroll costs. So keep that in mind. Other utilities, trash removal, security, some of the other things, that's still a little gray, but we believe that that'll get clarified soon. Ask your CPA, ask your banker how they're handling this, and keep that in mind. Again, if there's a stretching of the covered period, this may totally be irrelevant. So we will come back to that. As Mike said, these things, it's going to change next week. So let's see, seasonal employers, I think I talked about that. We have no real great guidance on seasonal employers and how a company is identified as a seasonal employer. So please keep that in mind when you're choosing your period. The other piece that I think isn't mentioned here is interest. Just make sure, I think Andrew mentioned it, interest again, for real or personal property, as long as those loans have been on the books prior to 215, you should be able to get forgiveness on those. Let's see. Mike spoke about the good faith certification. It's really important when it comes to that. The big piece I think that everyone's a little antsy about is the $2 million threshold in good faith certification. The hazy part about that has to do with affiliated entities. So for instance, let's say your company has common ownership, affiliated entities, and you have 5 entities that each received $500,000 in PPP money. Some people will argue, oh, I'm under the $2 million limit, I don't need to do that. I think this is going to get clarified even further, but it is our suspicion, based on everything that we're seeing and reading, that the affiliated companies will likely fall above the $2 million rule if they aggregate to that. So aggregated, you're over 2 million across your affiliated companies, you should expect that your good faith certification will need to be reviewed. Evidence of this on the application is a little hazy, but fairly clear, because they ask you to self-certify in a checkbox that mentions if your affiliated entities received over $2 million. So keep that in mind. When you fill out the application, you may need to consider grouping all of those affiliated entities with your documentation. So that's really important. So this brings us to congressional changes. So everything that we just talked about could have changed while we were sitting here listening to me ramble. But there are significant congressional changes that are about to happen as far as we can tell. I hesitate to ever put any stock in congressional changes when we have such a hyper polarized partisan thing going on in Congress. But in this case, last week, there was the House passed Paycheck Protection Program Flexibility Act, and the vote was very strongly bipartisan, 417-1. So both the Republicans and Democrats are getting behind these changes. And if you read anything that's on the web these days, the Senate, McConnell and Rubio are all taking up support for this bill. This bill may not come through exactly the way it went through the House, but we think that the guts of it will probably be very similar. So there's about a half dozen, 5 points here that are really important, that could impact a lot of the issues that we just talked about, a lot of the loan forgiveness procedures that we will go through. The first and largest is extending the forgiveness period beyond 8 weeks. Mike has mentioned that the House bill suggested 24 weeks, and the previous Senate bill said 16. So I'm guessing somewhere between 16 and 24 weeks for the forgiveness, for the covered period. So keep that in mind. Again, remember, we got loans, businesses got loans for 2.5 months or 10 weeks of payroll. If that payroll is or covered period is extended to even 12 weeks, it's very likely that the amount of forgiveness given is probably going to go way up. And some of these cutoff issues, the concerns, and all of the periods and all this stuff that we're comparing it to may really not matter as much. So keep that in mind. Reducing the required payroll limitation of 75% is the next one. They were talking about 60% in the House bill. That again is a hot topic. So keep that in mind, that it's very possible that that's going to change. And the reason by which that should change is that the essentially, there's a lot of companies that just couldn't rehire or bring people back because of closures that were required by the states, and so they couldn't pay the payroll yet. So they really they did have other costs that they had to cover, and so a higher percentage is needed for some of those businesses. Extending the program throughout the end of the year. Right now, as Mike said, the program's over at June. They're talking about extending it through December. I think the only hiccup right now in the Senate, from what I read maybe an hour ago, was that a couple of the Republican senators really wanted to stop around the end of August. So we're going to see what happens there. Obviously, that just gives more runway for people to get additional loans. Extending the loan term beyond 2 years to 5, that's probably likely that 2 years is going to get extended. And also the payroll tax deferment for companies who take PPP loans. So there's another program out there that you can hold on to your payroll tax money for an additional few months or so. That is now likely to be available to all the folks that take the PPP loans. So like we said, we think the Senate will likely pass something very similar, and this is going to get signed into law. It could happen this week. So that will impact the calculations. There's lots of templates out there. The AICPA has a wonderful template. We're not sure. Those templates are very likely going to change. So while a lot of clients out there really want us to get into projecting out how much of this will be forgiven, there are a lot of variables out there, like these congressional changes, that may really impact that calculation. So have maybe a little more patience. I think it's important that everyone understands that we really, this is an unprecedented time, and you hear that a lot, but these things are changing almost daily. So we like to keep everyone up to date as to what's happening. We are very optimistic that the rule changes that are coming are going to be even more flexible. And I think also everyone really needs to understand that, this is an enormous amount of money that Congress has put out to try to spur the economy and help the small businesses. But they've done their best to try to make a one-size-fits-all set of rules. And as you know, one size does not fit all. A 10-person company is very different from a self-employed person, which is very different from a 500-person company. And for them to get all this right in the first go-round is probably quite tough. So I give them credit for doing their best and trying to get this out there. So with all of that, I want to turn it back over to Kevin. And I think he may have other questions out there. I'm not sure. Kevin, have I rambled long enough?
No, thank you, Dan. We appreciate it. Appreciate the congressional updates. Not very often where you see something on Congress, in particular the House, has a vote of 417-1. So we'll see how that comes out. A couple of quick questions because we're nearing the top of the hour here. Thank you to everybody in advance for submitting them. The first one I'm going to send over to Andrew. It's a two-part question. One, Andrew, is it too late to apply for a PPP loan? And then this question in from Lisa, if the House and Senate approve the extension, can you apply for more PPP loan funding?
All right, no, terrific questions. And the answer to the first part is yes, you can still apply for a PPP loan. When the second tranche of money became available, there's still approximately $120 billion that are left that a company, nonprofit, and the like, whatever, could use for a PPP loan. So if you've not applied yet, I encourage you to apply. I also encourage you to use a smaller or community bank because there's still some set-aside money left for them. It might make the process a little easier. Now, to the second question, can you apply for more money? The answer to that is no. All the changes that are being discussed by Congress, none of them change the initial amount, the initial take 2 months worth of payroll and then add 50% of 1 month's payroll there, and that's your total. So the front end hasn't been changed at all. What's being changed is the forgiveness and payback sections of it. So no, you're stuck with what you've got, but if you don't have anything, now's a good time.
Thank you, Andrew. Another two-part question for you here. And this is it from Europros Collision. If we pay 2 months, if we pay 3 months health insurance in the 2-month period, are all 3 months of health insurance deductible? Part two, can we also deduct life and disability insurance premiums under PPP loan forgiveness?
Okay, terrific question. Let me answer the second part first. As far as life and disability, the rules specifically say employee benefits, and they interchangeably use the term health benefits. It does not specifically include or exclude life, STD, LTD. It's generally thought of as part of a benefits package that would be otherwise included. On the first part, can you squeeze in 3 payments over the 8-week period? That goes back to what our friends over at Hertzbach were saying about asking forgiveness instead of permission. The idea was this would cover 2 months worth of expenses. So while you could certainly try, that's something where you would be proceeding at your own peril. In that if you do try and squeeze in more than that, it's something could be caught and then determined to be non-forgivable.
Perfect. Thank you, Andrew. I think the next question here is going to be for Mike, and this is specific to federal contractors. This question's in from Ed Fry. Will you please help us, our government contractors, understand how cost reimbursement type contractors in regards to the loan, in regards to the loan and forgiveness affect reimbursement and invoicing the government? And also how this affects their overhead and indirect cost pools and rates?
Yeah, that is a good question. Anything that's being reimbursed in terms of wages on the PPP is going to have to be credited against the labor expense. So it is absolutely going to adjust the overhead rates. Government contractors also have to watch out. Some of them that are out there potentially receiving payment under 3610 of the CARES Act. Something else to watch out for that's specific to government contractors that's going to affect or impact their ability to even use the PPP money. So yes, it is going to have to be recalculated and factored in anything for forgiveness.
Terrific. Thanks, Mike. Mike, while I have you, I'm going to ask you another question. Is owner pay forgivable, or is it just subject to the 100K limit? And then part two, are bonuses considered qualifying payroll expense and also forgivable?
So the second part, I'll go first. Yes, bonuses are forgivable. That was clarified in one of the more recent interim final rules. They also specified hazard pay as well, as long as it doesn't exceed the total compensation amount. The owner pay, and somebody may want to jump in on this one too, Dan, clarify with me. There is a stipulation that changed that the owner employee reimbursements are slightly different at a lower amount than standard employees. I believe, and I'll have to double check and come back on that one, but typically, yes, they're absolutely included. We just want to verify the amount on those.
Yeah, I would agree with you.
Good. Thanks, Mike. Dan, quick question for you from Stephen Latteller, downtown DC. The AICPA has published a recommendation to businesses that are effectively shut down due to local regulations. We know much of DC still is, to wait to begin their 8-week period once those restrictions have been lifted. Can you speak to that?
Well, I think it's kind of hard to do that. I mean, I think that's a great idea. I guess it really depends on when your loan is funded, because that covered period is very specific. However, with all the changes that we're seeing, it's very possible that they won't have the expenses right away if they're kind of shut down. But if that covered period does extend to 16 or 24 weeks, they should be able to maximize their forgiveness in that situation. So there's no real choice currently as to when you start your covered period. The only potential adjustment you can make to it is for the alternative covered payroll period, which I described for biweekly and weekly payroll cycles.
Terrific. Thank you. Hey, Mike, I've got another question that's government contractor centric. If due to government contract completion and an organization lets one employee go, or maybe it's multiple employees as part of that government contract because it's been finished, will the loan then not be forgiven?
I'd have to look back at the FTE exclusions. I don't think there's anything specific to that, but they do specifically address voluntary withdrawals, employees that leave on their own fruition. They also do reference for cause termination. I don't know that would qualify as for cause termination. So I think we'll need a little more information on that one to come out, but unless somebody jump in if there's something out there that they've seen. I mean, as of right now, I don't know if it falls in the definitions of allowable for FTE inclusion or exclusion.
Gotcha. No, thank you. Mike, we'll have you another question here. This is in from Scott Miller. If you receive a $1 million in a loan, but only end up using $900K, then the company pay back the $100K balance immediately? Do they have to make it a loan, and will there be a repayment penalty?
Yeah, there's absolutely no prepayment penalties on this. So you do get the benefit of stretching it out over time at 1% interest, but there's absolutely no issue repaying it all right away.
Terrific, thank you. Question in also from Robert Malone, and maybe this one is for you, Dan. How long did you say it would take for banks to approve forgiveness from the time the request to forgive is submitted? Do you have any feedback on that yet?
So I think there's a 60-day window in which your application is required to either be approved or denied, and sent over the SBA. So it depends on the size also, but it's really important that everyone knows that it is, like Mike said earlier, this could be a 5-month process. Under 2 million, it's likely that it's a 60 days or less. I have that right, Mike?
Well, you got 60 days for the lender to approve. And then on top of that, the SBA gets 90 days to go back to the lender. So that's 5 months right there without issue. And if the SBA pulls for review, or if your loan's over $2 million, I mean, right now the jury's out on how long it's going to take. It could be significantly longer than 5 months.
Terrific. Well, everybody, I got one more question left, and we'll end it on that. This is a question in from Southern Maryland Pediatrics. It says, if rent was deferred in prior months to the PPP loan, can that be paid along with the current rent expense during the PPP loan period?
Yeah, I guess I could take that one. I'd say it's not likely that is a forgivable expense. So if deferred rent represents more than the 2 months of those overhead costs, it's unlikely that that's going to be able to be forgiven, unfortunately. Yeah, I don't think we've read anything specific to that, but I think it's pretty clear, like Andrew said, that the intention is there to cover 8 weeks worth of costs incurred or paid.
Terrific. Thank you. Well, everybody, we're at the top of the hour. We're actually a couple of minutes over. So I wanted to thank everybody for joining us today. There were a number of questions, unfortunately, we still could not get to. The good news, though, we have everybody's email and contact information, and we're going to disseminate those questions out to the panelists, and then the panelists are going to reach out to you directly. So you have a little one-on-one love coming your way shortly. If there's anything we can help you with in the interim, please don't hesitate to reach out. But we hope everyone, as we approach the weekend here, a couple days away, have a safe and a good weekend. And thanks again for joining the Capital Group and Hertzbach Company here this afternoon. Thank you.